Milky Mist in studio. Now, interesting business, first off, viewers, because, all the others, the likes of a Heritage Foods, the like of a Parag Milk, and largely, they also have a large component of milk and milk products, or not value-added products as part of the product suite. Milky Mist, on the other hand, predominantly or pretty much entirely value-added. And let me bring on board Satish Kumar T, who is the chairman and managing director at Milky Mist Dairy Food, and K. Ratnam, who is the whole-time director and CEO at Milky Mist Dairy Food, joining us in studio. Great having you here, gentlemen. Firstly, many congratulations. Anchor book closes and closes successfully. How has the interest been? Let me start with that. Satish, you want to go?
We are in the 100%. We are in the value-added dairy product space, and it's a unique business model we created last 35 years, and of course, we are getting a very good response from the market. Yes, thank you.
And what were the kind of investors that come in for your anchor book?
So we have Temasek, IFC, we have IPO, ICICI Prudential Mutual Fund, HDFC, 360, White Oak, and there are Invesco and Motilal Oswal, good market funds.
Okay.
Yeah.
And just give us a sense, therefore, from whatever I'm gathering, Satish, you're going to be using a lot of the funds with regard to repayment of borrowing. What does this do to EPS? Let's start with that first, if you can give us a perspective.
We have about 1,350 crores, debt as on today, and about close to 500 crores debt will be repaid. So leaving that, we'll have somewhere around 800 crores of debt, which has got a low interest base because it has got a 3% interest subvention.
Okay.
And that would give us a good, support for our baseline.
How do you look at, this IPO, you're coming out with an IPO, you have scaled down the IPO as well, Fresh and OFS has been scaled down. What is the reason for the scale down?
No, see, our original IPO was 2,035 crores, and out of that, as per, RHP, DRHP, we went for a pre-IPO, and that pre-IPO amount was 482 crores. So subtracting that 480 crores, okay. Now we have come out with a 1,553 crores IPO, so there is no downsize at all.
Okay.
And sorry, Satish, coming back to you, where have you utilized the pre-IPO funds, and how do you utilize that part of the money that's coming?
Majority it is gone for repayment of the debt. Okay. And mainly for repayment of the debt.
Give the same sense of the product profile that you have, because you are into value-added dairy products, which is there. How's that market looking? Because you have a lot of competition from local players for your product. Yeah. How is that looking for you, and how are you planning to expand yourself?
See, if you take in the Indian market for a dairy space, we are unique in the dairy, in the product space. Particularly today, the completely consumer moving, one is quality. In the quality, if you take clean label product and good gut health and protein. So after COVID, the whole dynamics is changed today. Completely people only want no more cheap product or want only high quality product. So this is how we already we are in that space, and we've gone with globally the best technology each and every product.
When I'm looking at your capacity utilization, Mr. Ratnam, let me come to you. On most products, it's sub 55%, which means that there is plenty of tailwind to go for you to expand capacity. How quickly do you expand that? How quickly do you get to, say, 70, 75?
If you look at us, last 5 years, we have been growing at a CAGR of 31% plus, okay? And all our capacities have been built for a longer period, because these are all, high-end, high capacity machines, okay, for a better footprint. So right now, on an average, we are doing something like, 35, 40, 45% capacity utilization of all our products. As we have been growing at a 30% plus, both in volume as well as in value, the capacity utilization will come up, to the level of 75, 80% going forward in the coming years.
Which is, sorry, I'm just going to ask one more follow-up. So which means that you will require more milk as well from a procurement perspective. How do you solve for that?
See, Tamil Nadu produces about 3.5 crore liters of milk every day. And all the organized players like Milky Mist is put together collecting about 80 lakhs to 1 crore liters. And about 50 lakh liters milk is retailed by the consumer, I mean by the producers. Still, we have got a lot of milk, more than 40% of the milk is left with, which we would be tapping it. And that's what we have been doing it no, since last many years. So milk availability is not an issue at all.
Satish, demand, is that an issue at all? Do you need to do more on the marketing side of things to market the brand better, to ensure that you go from this sub 50% towards 75%? Because I think there are only two levers required. One is milk and the other is marketing, is my guess, but correct me if I'm wrong.
See, from unorganized to organized, the shift is happening very fast. As I mentioned, the quality product, consumer looking for quality product. And in Milky Mist business model, we cannot go with the subscale. Each and every project, we go with the full scale of the project. And we are prepared for that. This is how we do.
And how do you plan to expand? Because this is more of a regional play. For dairy is normally a regional play. So when you expand, how are you looking to expanding into various other regions?
When we didn't have the plant until 2019, we were largely concentrating, focusing on south markets. That's a bigger market, bigger cities. Now, since we have the capacities, okay, and we started expanding our marketing footprint across the country. Now, we are present today in 22 states and 5 union territories. And as the company own and operate its own logistics, it becomes much easy for us to transport the products from one location to the entire nation. So transportation becomes much easy. And we are very strongly, since last 3 years, we have been very strongly building our market infrastructure across the country, because we started with the west like Goa, Maharashtra, then we went into Gujarat and Rajasthan. We are present in NCR, we are present in eastern market. Now we are building our market capabilities in UP and Bihar. So we have been expanding our footprint because of our the basket of products and the product portfolio.
Mr. Ratna, if you look at, there are a couple of dairy companies which are listed and they are listed peers of yours. One of the things which is coming out is the high valuations that you have at this point in time, 71 times or FY26 diluted equity, which is there, compared to maybe Hudson or a Dodla or a Parag, which has a lower PE. How do you, convince the investor to invest?
It's a good question, but I look at it in the other way, right? While with due respect to our competitor, the friends, see, we have been growing at the range of 30% plus year on year, and with the low base as well as the high base also. When I say low base, it was at 500 crores also. Now it is 3,200 crores. And that gives us a huge leverage to sweat our assets and maintaining the margins and maintaining the profits and all those. It's going forward, I think we would expect a PE going down to something like a 55, 60 in FY27.
That's 30%, but 55 is also higher than other peers at that 1 year forward.
Yeah, but the opportunities exist a lot. When I say that we are growing, just give you a perspective. The paneer market in India is 1 lakh crore. The organized sector's share is only 10%. So look at the opportunities which is available for a company like Milky Mist, who are known as a paneer. Basically, he's known as a paneer man in India. Okay, so look at the opportunities available for us. To expand the market and to expand our organized sector trade to at least 25%. Huge gap.
I just wanted to get your perspective on paneer, because you spoke about paneer. The government is trying to clamp down on analog paneer. Has that led to a higher demand for your paneer? And dairy prices are going up. Are you able to pass on that entire thing to the customers?
See, as far as we are concerned, two good things have happened. In 25, we had the GST becoming zero for paneer. That has given us the price difference between the unorganized and the organized is almost equal. So that was one great benefit done by Government of India. Okay, that has increased our the volumes. And now because anyway, Mr. Satish would always tell that quality is the prime importance for us. We should never compromise on quality. So he should always tell that one day authorities will come down heavily on the poor quality products. So we were prepared for that, okay, and with automatic and all things. This is definitely going to help us. Rather helping us, it's going to help consumers to have a better product. That's what we look at it.
When I'm looking at your balance sheet, if you can give me a perspective as to how to look at it afresh, because you'll pay out a lot of the debt and therefore there'll be an impact on the P&L as well. You've got 100 crore rupee interest cost on your P&L, FY26. Will all of that go away? Will you still have some debt sitting in the balance sheet, and therefore how will the P&L look? I'm trying to get to the fact that the P which Sajith highlighted of around 71 times may well shrink quite sharply just as a result of the fact that you're repaying debt, and you'll have maybe 70-80 crore of additional profitability hitting your P&L as of FY26 itself, plus on top of it the growth for FY27 that you clock. Is it the right way that I'm
Yeah, that's the right way. I think you got it very right. We will be paying the debt repayment of the higher interest cost, something like 8.759% interest. Okay. And we still retain something like 800 crores, 750 to 800 crores of debt, which has got a lower interest rate because of the government of India's interest subvention of 3%. So the effective rate is around 5.75%. And that will bring down the interest outgo. Instead of 100 crores, it would be something like around 50-55 crores. So that gives us a good an input to improve our the bottom line. And apart from that, our there's a lot of headroom because of our operational efficiency. We are going to leverage the capacities which is available. We are going to leverage the growth which is available. Everything would contribute to the bottom line and improve the PE ratios.
Satish, beyond Paneer, are you looking at other products linked to dairy as well, confectionaries, ghees and others?
No, we are only focusing on mostly in the dairy products. And this dairy product itself is a new age dairy products like Skyr and Greek yogurt, and specialty cheeses like Edam, Gouda, Emmental, Parmesan. These are the specialty cheeses so far not familiar in India, but consumer wants this kind of premium products today. So we want to be innovative dairy company. We want to bring a lot of Skyr, which is a high protein product today, which is first time in India we bought this technology. And then we are looking for fabulous growth for that. So these are the new products we want to bring in.
Satish, how is competition in some of these products?
It's a very niche school because entry barrier in this technology is very, very difficult. It is not easy to enter into.
Why is that though?
One is investment. Another thing is the technology. We need to bring a lot of technologists from Europe, and we want to make it. There is a very entry barrier is very, very tough in this thing.
Give me a sense of the margins. 13.7% odd you have EBITDA margins. Is there a room to increase that in this segment for you?
As I told you, yes, there's a larger headroom available for us. Last year we did a 13.9. From 13.2% in FY25, we have gone to 13.9 in FY26. And there's a larger headroom available because of the capacities and the growth and the product mix. So we are Paneer, of course, Paneer is our flagship product. And apart from Paneer, we are the equal growth is coming from cheese, yogurts, ice creams, all those things. So that gives us a larger headroom to play and improve upon our margins from where we are now.
Mr. Ratnam, I'm also trying to understand how you're building on your SKUs. A chunk of your revenue, I believe the top 10 SKUs contribute around 33% of the revenue, if I've read this right. And you have a large base in terms of SKUs. How do you start selling some of the products which are not as well accepted or still need some more marketing? How do you get to that?
We have about 99 SKUs, which is contributing to the top line about 65-70%. And there are other SKUs, which are contributing to the rest of the top line. And these SKUs, because the consumers require a kind of the variation, because somebody wants a 10 rupees pack also, okay, somebody wants 15 rupees. So then the SKUs built up is based on what the market requirements are. Okay, that's how we do it. And when you introduce any new product, you can't go with one single SKU. You will have to go with at least a minimum 4 or 5, something like a 200 grams or 100 grams or 500 grams and 1 kilo. So that's how we built around the SKUs. And we focus on each and every product category. Okay, that's our formula. And some of them are hero products. They keep moving without any much of an effort. And I wouldn't say much of an effort, but they keep moving because there's a brand pull. And some of the products require a little bit of a push, to make it more reaching to the consumer's point. So every product and every SKU for us, Milky Mist is concerned, it is very critical for us, and we look at it that way.
Now, one thing which we've seen in the dairy thing is a lot of sales happen to the HoReCa segment. For you, is that one big opportunity which is opening up?
See, Milky Mist, as I told you, we are not into milk at all. Pouch milk we don't sell.
No, I'm talking the value added.
Yes, in the value added product, we are present in all the trade channels, be it general trade, that is about 38%. We are present in modern trade, we are present in quick commerce and e-commerce, and our HoReCa segment is around 17%. Okay, that is hotels, restaurants, cafeterias. That is also continue to grow. And we are not into bulk commodities also, except the whey powder. So we look at this, every product is as a value-added product rather than looking at it as a bulk commodity. So HoReCa is an important segment for us, but equally important is other trade channels.
Profitability, I believe, in other trade channels may be higher because HoReCa is B2B more than B2C. Is that the right way to think of it?
HoReCa is not a B2B. It's a B2C only because it's a hotels, restaurants.
Sure.
Like your 5-star hotels
Sure.
or airlines. Sure. These are the things. There could be a difference of 1.5% of margin difference, but
Okay.
that is offset by the other channels and the other product categories.
Sure, sure. Thank you so much, Mr. Ratnam, as well as
Thank
Satish,
you.
for coming in and
Thank
speaking to us, giving us this perspective, and wishing you all the very best.
Thank you,
Day
thank
one
you.
of the IPO Open.
Yes.
In fact,
Thank
just
you.
2 minutes.
Thank you.
Thank you.
Thank you.
Past
Thanks a
10,
lot.
so-
Yeah.